So if you would have asked me a few years ago what BYOB was, I would have probably responded something along the lines of bring your own beer. But that's not what I think anymore. Now, I think be your own bank. And here's an example. Walt Disney is a man who's influenced the vast majority of people across the globe. From animated pictures to theme parks and attractions, most of us have enjoyed the work he did in his life. But what most people don't know is that without his cash value life insurance policies, much of what he built would not exist today. Ever been to Disneyland? It is one of the most popular attractions in the world. People fly in from all over the world to visit this magical kingdom. But when Walt Disney wanted to take his successful animated features and television programs and turn them into an amusement park for children and parents, not everybody believed in his vision. At the time, the only amusement parks in the country were run-down attractions. They were known to be shady and dirty and were hardly a place for families and children. Believing it would be unsuccessful, potential financiers of Walt's venture rejected his request for financing. If Walt wanted to start his theme park, he'd have to find another way. Fortunately, Walt was a very savvy individual known for his success in business and finance, and had been stockpiling cash into his life insurance policies. Since banks and lenders continued to reject his financing needs, he decided to provide his own financing. Among other things, Walt borrowed against his cash value life insurance policies, and in 1955, Disneyland opened its doors for the first time. Within 1 year, over 3.5 million people visited the park. It was an instant success. JCPenney. When the market crashed in 1929, JCPenney, then a dry goods store for mining and farm families, was severely affected. As the sole owner, James Cash Penney took a huge dive in company and personal growth. The financial setbacks were so devastating that it even took a toll on his financial and physical and mental health. Fortunately, Mr. Penney had accumulated massive wealth inside his cash value life insurance policies and was able to borrow against them to help the company afloat and eventually rebound. If he hadn't used cash value life insurance as a tool to keep his money safe and accessible, it likely wouldn't have been there, and JCPenney would have likely closed its doors. When he died, the Grand Rapids Press wrote the following about him. In the great stock market crash of 1929, he was almost wiped out, and with the money he borrowed on his $3 million life insurance policy, he was able to rebound. Today, JCPenney takes in revenues of $18 billion a year and has over 1,100 stores worldwide. Foster Farms. In 1939, a young couple named Max and Verda Foster borrowed against their life insurance policies to invest in an 80-acre farm in California to raise turkeys and chickens. Today, Foster Farms has more than 10,000 employees and sells products all across the globe. Okay, and there's more examples in the book: Stanford University, Pampered Chef, McDonald's, and so many others. These are just 3 examples of companies and people who have used life insurance to be your own bank.